Are you a struggling trader? Have you been trading the forex market without any success? Are you a newbie that is about to enter into the forex market? If you can be able to follow this rule in 2024, you are going to be successful. Nothing is going to hold you back. So my advice for you is to pay clear attention so that you get the full gist of what I am going to be sharing with you in today's video. 2023 is coming to an end, just few days, and we are going to enter into 2024. So I'm going to be sharing with you some simple rules that if you strictly follow them starting from 1st January 2024, by the end of 2024, you are going to smile if you strictly follow these simple rules that I'm going to be sharing with you in this video. The reason why so many forex traders are lagging behind or are not successful is because they did not have the right mindset. They did not have the rules, the guiding principle of a successful trader. I've been in this business for the past 8 years. I've gone through ups and downs. I've learned a lot. So what I'm sharing with you is a personal experience. It's not some copy and paste stuff. It's based on experience. These rules that I'm going to share with you is a simple rules that I implemented, and to be sincere with you, I strictly abide by them, and that is why I'm successful in this business. So the first rule is you have to treat your trading as a business. Treating your trading as a business means you are going to give it all the attention that it deserves. So the first rule is that in 2024, you are going to treat your trading as a business. Do not treat it as a gambling. Treat it as a business, right? That is the number one thing you should do. After that, then you have to wake up as early as possible. It depends on your time zone, right? So it is always advisable that you wake up early so that you can prepare yourself. So if you are in Nigeria, you can wake up by 6 o'clock a.m. in the morning, right? So that you can be able to monitor the market starting from that time. Why do you wake up by that time? You wake up by 6 a.m. because you want to catch the move for that day. Unless you are a position trader or a swing trader. But if you are a day trader that wants to capture the daily move, you have to wake up as early as possible so that you can be able to monitor the market for that day to know how the market is moving. Then, have you been blowing account? Have you been blowing your account? So make up your mind and say, 2024, I am not going to blow my account. So the best way for you to stop blowing your account is for you to respect your money management strategy. And like I said, you need to risk only 1% of your trading capital. With that, it is going to be impossible for you to blow your account. So when you wake up in the morning as early as 6 a.m. and you have done your morning devotion, the next thing you have to do is to look at the pair that you are trading. If you are starting, if you are a newbie, I will advise you to focus on just one pair. If you are a newbie or you are a struggling trader, I will advise you to focus on one single pair. It might be GBP USD, it might be gold, it might be Euro USD, it might be silver. Any pair that you feel like you want to trade, please, as a newbie forex trader, you have to focus on that pair so that you don't get distracted. You need to have a specialized knowledge. Have a specialized knowledge on that particular pair which you are trading. So when you wake up in the morning as early as 6 a.m., you analyze that pair and look at the market structure. Right? So once you wake up in the morning, you do what? You look at the market structure. You know whether if the market is in an uptrend, downtrend, or ranging. So where do you look at the market structure? At the higher time frame. If you're a day trader, you can simply look at the 1 hour time frame or the 4 hour time frame, right? And then look at the market structure. Is the 4 hour time frame in a downtrend or in an uptrend? The same thing applicable to the 1 hour time frame, so that you can be able to catch a movement, a good entering movement for that day. So once you have identified an area of value, you can use your tools, right? You can use the moving average or a trend line to draw your area of value, right? Remember that you are expected to be trading only from your area of value. So once you have identified the market structure and you have confirmed that the market is in an uptrend, then you need to use a trend line or a horizontal line to draw an area of value, which is a support level where you are likely to take your trade from, right? Or you can make use of the moving average so that you can always be placing your trade at an area of value. That is number one, at an area of value. Then after that, you also need to look at the candlestick pattern, right? So if it's an uptrend, you look at a bullish candlestick pattern. If it's a downtrend, you look at a bearish candlestick pattern, right? So candlestick pattern will help you to know the exact time to place your trade, right? So if it's an uptrend, we have the bullish engulfing pattern, and we also have the hammer. You can simply wait for a hammer to form at an area of value for you to place a trade, or you can wait for a bullish engulfing pattern to form at an area of value for you to place your trade. So once you have this in place, you should also think of your money management, right? Depending on your capital. What is your trading capital? If you have $10,000, then you need to risk just $100 per trade. That is 1% of that $10,000. And if your capital is $1,000, then you need to risk only $10, which is 1% of your trading capital per trade. Then your risk reward ratio should not be anything less than 1 to 2 risk reward ratio, right? So you can either use 1 to 2 or 1 to 3 or 1 to 4, right? Meaning you are risking lower amount of money and you are aiming to gain higher amount of money. So your risk reward ratio should also be looked into. So once you have put that in place, then you also need to put your stop loss, right? The stop loss must always be below or above an area of value. If it's in an uptrend, it means your stop loss must be below a support level, and if it's in a downtrend, it means your stop loss must be above the resistance level. So make sure that your stop loss is always at a point whereby if the price gets to it, it invalidates your setup. It invalidates your trading setup. It means that the trade will definitely go against you. So you cut your losses. The best thing to do is to cut your losses when the losses are small, right? You cut your losses when they are small, right? Then you can hold onto your trade and cut your losses. So that is why your stop loss should not exceed 30 or 40 pips, depending on your risk management and money management, right? If your stop loss is 50 pips, then your take profit should be 100 pips. And if your stop loss is 30 pips, then your take profit should be 60 pips. So make sure that you have at least 1 to 2 risk reward ratio, meaning that you are risking 1% to gain 2%, right? From 2% and above, right? You can also risk 1% to gain 3%. You can also risk 1% to gain 4%, but the minimum is 2%. You risk 1% to get 2%, because if you decide to risk 1% to gain 1%, sometimes you might have maybe consistent losing streaks, right? But for the fact that you don't have an edge against the market, you might end up in losses. But if you are risking lower and aiming to gain higher, the period that you are losing might not affect you, because just when you enter into your winning streak, you might be able to recover your losses easily. So that is why you should consider your risk reward ratio. So once you have done that, the next thing you need to understand that trading is a game of probability. You need to understand that trading is a game of probability. The market will not go to your direction all the time. So this is something you need to bear in mind. Sometimes you might have a good setup, right? But unfortunately, the trade will go against you. So you need to have that at the back of your mind. Then you also need to look at the fundamentals. Like I say, depending on the pair that you are trading, right? If you are trading USD correlated pairs, then you need to look at the US economy. So you look for news. You go to Forex Factory and search for news. Make sure that you are searching for news every day, right? So if there's a high impact news that is coming on a particular day, so you have to do yourself a favor to stay away when the time for that news is approaching, because news can have a negative effect in your trading strategy. So you need to check news every day to know when a high impact news is going to be revealed, so that you can stay away from the market, right? So once you have put this in place, right, then your trading psychology, like I said, you should have a realistic expectation. Remove fear from your mind. Because trading is a game of business, right? It's not something that you just go and gamble, right? It's a game of business. So the business there means you have to plan it, because if you are starting a business, you need a business plan. You plan your business, how you want your business to be structured, so that you can make profit before the end of the year. The same thing is applicable to trading. So you treat your trading like a business. You plan your trading very well. So doing that, you need to look for a strategy that is suitable for you. Remember that I keep telling you consistently in my videos, there is no strategy that is 100%, right? There is no strategy that is 100% reliable, right? Every strategy has at least 85% or 80%. So it depends on the person that is implementing that strategy. So that is what matters. So you pick a strategy that is conducive for you and backtest it. Backtesting is very, very important, because it gives you confidence. If you have a strategy and you backtest that strategy, and after backtesting it for several months, and you discover that the strategy is profitable in the past 7 months or 8 months or even 1 year, it will give you the confidence to trade that strategy, knowing fully well that the strategy performed well in the past. So you have the mindset that the strategy is also going to perform well in the future. So backtesting your trading strategy gives you confidence while trading, because you are trading knowing fully well that you know what you are doing. The strategy you are using has already been backtested and it was profitable in the past. So that is why it is recommended that you backtest your strategy for you to have confidence while trading. Next thing you have to do, the next rule you have to implement is your greed. You need to work on your greed. Have a realistic expectation. Like I said, the market is like an ocean, right? It's like an ocean where people comes to get fish, right? The market is an ocean, while fish is money. So you just come to the market and take what you can grab and leave. Don't be greedy. Don't try to gather everything. Don't try to make all the whole money, because you might not be able to get everything. Just take the little you have and go out and do something with it. The next thing you need to take into consideration is to know that trading cannot give you financial freedom. Do not listen to what people are saying that trading can give you financial freedom. Trading cannot give you financial freedom, right? What can give you financial freedom is your businesses. That is what will give you financial freedom. So trading is part of your business. So don't have the mindset that trading will give you financial freedom, so you don't have to do any other thing. Please do not be deceived. Trading is a 50-50 chance. It's a game of 50-50, right? Sometimes you win, sometimes you lose. Today you might be profitable, tomorrow you might be in loss. So that is how trading works. So don't allow yourself to be deceived by people who are telling you that trading will give you financial freedom. No, trading cannot give you financial freedom. Rather, trading will give you the money for you to create a financial freedom for yourself, right? So you create financial freedom, not trading giving you financial freedom. You understand what I'm talking about? So you need to understand that mindset, because some traders feels that you can just inject $1 million into your trading and you just relax, the $1 million will just turn to $100 million. That is not how it works, right? So as you are thinking positive, you also have to think negative, right? If you are thinking positive, also think negative. What if the money goes against, what if the trade goes against you and you lose the money? So these are the things you should be thinking, right? You should be thinking, okay, if I invest $1 million, right, in the next 5 months or 6 months, that $1 million is going to give me $50 million or $30 million, right? I know that will be your thinking, but you also have to think, what if I invest this $1 million and the trade goes against me and I lose this $1 million, right? So when you think positive, you also think negative. That is the mindset of a forex trader. You don't just think positive all the time. When you think positive, you also think negative. What will happen if I lose this money? Am I going to be able to cope? Can I be able to feed my family? Will I be able to forget this money that I've lost? So these are the mindset of a forex trader. If you don't have the mindset, you need to work on it. So that is why I said forex trading cannot give you financial freedom. If you want to know what is financial freedom means you don't need to work, right? You don't need to work and your money is growing like grass. That is financial freedom, right? So what will give you financial freedom is your businesses. Let's say you venture into trading and you're able to make some profit from your trading, right? You can use that profit, right, to build businesses that doesn't demand your physical presence, right? That is what I'm talking about. So you can establish businesses, employ people, they will be working for you, employ managers that will be paying them salary, right? Or you can go into real estate. You can buy residential houses, put it for rent so that people can rent it and be paying you house rent, right? So these are the only ways where you can generate real financial freedom, because you don't have to do anything and money will be entering into your account, right? Because in forex trading, it will play with your emotion, it will play with your mind. So don't be deceived by those telling you that forex trading will give you financial freedom. Please do not be deceived by that. Forex trading will give you money. It will make you rich, but it will not give you financial freedom, because in forex trading you need to put in the work. You need to trade to make money. You don't just stay and money will just enter into your account. You must trade. You must take risk for you to make money. You must risk money to make money. So that is forex trading, right? So it can give you the financial freedom we are talking about. So have that at the back of your mind in this 2024, and say to yourself that 2024, I want to trade the forex market in the right way. So I'm going to have my trading rules in place, and I'll make sure that I stick to my trading rules without violating it. So, ladies and gentlemen, if you are about to venture into forex trading, you should make sure that you have the right mindset of a forex trader. So that is the only way you can survive in the forex market. That is the only way you can succeed in the forex market. So please take note of that. So that is all I have for you in today's video. If you love this video, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to turn on the notification icon to be notified whenever I publish new content. I will see you again in my next update. Enjoy the rest of your day. Bye.